Hey there, good morning. I just going to do a quick video here on using the candle reversal scan. I was going to do something yesterday. I was going to go through more how to actually use it and looking at the candlesticks, etc. But actually, after seeing Louise Loopy Lou, what she did yesterday, and how she worked out a little sort of a little mini strategy around this, I just thought I would kind of go down that road, to be honest. So after the market closed on Thursday, I copy and pasted this and I sent it to Lou, and she sort of did some back testing just over this particular day's worth of scan results and came up with a nice little stat really of what she would have made, how she would have traded it using 50 shares, I believe, and it was quite impressive. And it kind of got me thinking, we really do overcomplicate things at times, and I don't want to go off on a tangent here, but I watch the chat and I see things, and sometimes it really makes me cringe. I see traders that have been trading for 6 weeks, 2 months, 3 months, talking about stuff that even I don't understand at times, and I've been around the markets for quite some years, and I've got a reasonable understanding of how the markets work. I understand the correlations within the market of how different things correlate together. The whole thing's one giant mechanical function at times, but I don't understand some of the things that people put out there. Guys, we've got to keep this simple. Don't overcomplicate trading at times, okay? Don't look for things that aren't important. Look for things that are going to make your trading as easy and as simple as they can be. And I think something like this is as simple and easy as trading gets, in a way. It's something that everybody can do. You don't have to be an experienced trader to be able to take a scan result, put it onto the chart, draw a couple of lines, and work out a very fast risk reward and take a trade. Anybody really can do it. It's just about having the confidence to do it. And so what we're going to just look at is we're going to look at the scan results from Thursday. There weren't too many, so it shouldn't take too long, but I want to go through it trade by trade really, and we'll look at which trades we would have taken, which we shouldn't have taken, how we can do it, and then just want to look at really a way that you can use this to formulate a little trading strategy, because that's what everybody needs is a proven trading strategy. My advice, if this is the sort of thing that interests you, is spend a month. What I'm going to do is at the end of every day, I'm going to take a screenshot of the scan results for this and probably the VWAP scan, and I'm going to post it in the members posts area so that anybody can download it, can take a look at it, and can back test it at the end of every day, go through the results, and look for some common denominators of where they can take their entries and exits. And from that, you can start to work out a trading plan. Give it a month and you'll have some nice results. And the nice thing about keeping results of these things is after 3 months of keeping of making your stats, you will have a pretty solid trading plan. After 3 months, you will have seen most market conditions, very strong days on the SPY, very weak days, sideways days, choppiness, nice trading, horrible trading. If at the end of that 3 month period we've got a green, a profitable strategy, something that gives you a good risk reward and has made money pretty consistently, then you can trade that strategy then with huge amount of confidence, knowing that no matter whether the day starts out with 1 or 2 red trades, whether the week starts off with a red day, you just know at the end of each week you're going to be green, because 3 months worth of stats don't lie. Certainly something I'm going to do on this particular scan is keep a lot of stats on it now, because I think that it's a really good opportunity to make some money. So without further ado, let's get into Thursday's results and just take a look at how we could have made the trades, etc. So first up is CVS. CVS hit here 10.18. So 10.18 was this candle here, into this one. So basically what I'm looking to do is I'm looking for this candle here. Okay, so we look at this candle here, all right. It's like a spinning top candle, all right, an really extended doji, shows a lot of indecision. It tried to go down, it tried to go up, it kind of got stuck in the middle. The candle opened here, it closed here. This is where the new candle opens, and it instantly starts to go up. Okay, now if we want to look at this on a micro basis, then we can look at it here. The problem with the 1 minute, if you're trying to trade something like this, is it's very noisy and it's very choppy, but we can see how it comes down to the low there, and then the next candle opens up and it goes up, up, up. All right, and that's basically this candle here going up. So I'm going to take this, the break of this here, as a buy signal. So let's just put this in here. Okay, so I'm going to put the buy signal there, and our stop is going to be there. All right, so the buy signal is at 61.52, and the stop is 61.35. That gives us a 17-cent stop. All right, so let's say we take 100 shares. We're only risking $17. Let's say $20 maximum, with a little bit of slippage, or with a 5-cent spread or something, which you're probably going to get on this 5, 6, 7-cent spread. If it's a 15-cent spread, don't take it. If you don't like the spread on a stock, don't take it. Or take a tiny size. Sitting on the bid on something like this, you might lose your fill. I tend to think if it's a tight spread, 4, 5, 6 cents, then I'm probably just going to hit the bid on this just to make sure I get in, to be honest. But that's just me. I'm not going to sit there waiting, because I'm just going to miss my fill a lot of the time. Risking 17 cents is very reasonable. Okay, it's not a big risk, and as I say, if you're happy to risk 17, 20 dollars on the trade, then use 100 shares. It's a nice size to use. So we get in here. All right, it dips down a bit, but it doesn't come near our stop, and then it starts to move up. Now it comes up to the whole dollar here of 62, which is obviously going to offer us some resistance. Same, it's around the VWAP as well. So let's say we're going to take off half our shares here, coming into the 62 resistance area, the VWAP 62. Taking off 50 shares, that gives us a 65-cent gain. Okay, 65 cents on each share gain from there to there. On 50 shares, that gives us $32. So we've locked in $32 on this trade by taking it on the break of this candle. So you can see what I've done there. As soon as this candle broke the high of the body of the previous candle there, that's where I'm going to go in, and I'm going to risk off the low of the wick. Okay, because that is the low of the day. So at this point, we've taken 65 cents, and what I'm going to do now is I'm going to set my stop on the rest of the shares at here, at the low of the day, or you could set it at break even. It doesn't really matter, whatever suits you. I think personally I'm going to set it at the low of day because we're only risking an extra 17 cents a share. By doing that, leaving it to be, let it do its thing, stop looking at it, just leave it till the end of the day and have a look if you got stopped out or not. Wait until, last 15 minutes of trading, make sure your positions are closed, see where you've got to. At this point, coming into the last 10-15 minutes, we've got this little push here. We push up to 62.50 area. So let's say we're taking him off. It's the last 15 minutes of the day. We're taking him off somewhere around here. On our last 50 shares, we've taken off $1.15 per share, which gives us an extra $57 roughly. Okay, and you've done nothing. All you've done is take off here and just let the rest work themselves out. On this trade, it worked out quite well for us. Taking him off here before the close, that gives us a total on the trade of $90. Okay, on 100 shares. We risked $17, so it gives a risk reward on that trade of around 5 to 1. Absolutely stress-free. We've really done nothing. Once this part of the trade here gave us some resolution, we took off half here. Okay, we took off half our shares there. There was nothing else to do. We'd made our money. Set stop, put it on a side chart, keep an eye on it. Don't forget to check it before the close. We get this nice little pop into the close here. We take off the rest of the shares. We bank $90. Thank you very much. Easy peasy. Well, not easy peasy, but it's pretty stress-free. And that's the first trade of the day. 10.18 first trade hits, and it gives us $90 from 100 shares. That's not bad. Second trade is SHOP, SHOP. This one is a short trade. Hits the scan here, which is 10.50, 11.01. So okay, so it hits this. It hits here. Actually, hits on this candle going into this candle. So again, we're going to take our trade on the break of the body here. So just there. Okay, as it breaks the low of that body, we're going to get in and we're going to risk off here. So we're getting in at 126.16. So let's say we only use 50 shares on this one. All right, $100 stock. We probably don't want to. You might not feel comfortable using 100 shares. We're gonna have to risk a bit more because it's a higher priced. It's a high priced stock, and the candles are quite big. But fortunately, this candle here was a nice short body. Had it been a great big body like that, I might not have looked at. I didn't take the trade, but we might not have been so keen on taking it. As it is, it's a nice small risk reward really. We're risking 50 cents a share roughly. Okay, so we're risking off 125.72 and we're in at 125.17 area. So risking 50 cents a share on 50 shares, we're only risking $25. I think that's okay. It's a reasonable, nice little trade to risk on. We get some instant resolution on this. It drops down quite hard. I don't know, would you have taken some shares off there? Would you have let it play out a little bit? I personally want to leave it. I want to give it to another candle or two to see what it does. We get this sort of indecision candle here. Again, this candle opens, it goes a little higher, then it drops. Hard to say. I'm going to say we're going to take off half our shares here at 123.50 on this candle. Okay, just it's hard to say. Would you hold on? I don't know. I'm just trying to be honest. You know, trying to be honest to how your emotions would tell you. If we say 123.50 for our first cover on 25 shares, it gives us $2.20 a share on 25 shares, which is roughly $55. Okay. Again, set stop at break even or high of day. Leave it to do its own thing. On this occasion, it comes and it stops us out here at break even or here at high of day. Okay. If we say we're breaking even on the second part of the trade, that gives us $55 on the trade. So could have worked out a lot better. You might have taken some out here on the VWAP reclaim and made more on it. Maybe not. For me, I'm just setting my stop to break even and forgetting about it at this point, because I don't want to be watching the chart all day. I want to be concentrating on taking more plays from here, putting this on the side chart, again looking at it at the end of the day. It stops us out around 3 o'clock in the afternoon. So that's it. So we took $55 off the trade, which gives us a 2-1 risk reward in the end. Still, it's a green trade. You can see again the entrance is pretty clear. Break of the body of the previous candle, risking off the high of the wick of the previous candle. Pretty simple, really. Nothing too complicated about it. Next one was SQQQ. Yes, it's worth taking. I'm not really into trading the Qs, but it gave an honest signal here at 11:07 to go long, which was here. So we're taking that. Okay, taking the candle here. So it opens here, closes there. That candle opens, goes up, breaks the body of that last candle at 18.54. So we take 100 shares. And we take 100 shares here. We risk off here. So we're in at 18.54. We're going to risk off 18.40, which is a 14 cent per share risk. On 100 shares is a $14 risk. Again, we're not betting the house on it. Nice little risk. Nothing to stress about. Not a big trade. Taking off half at 18.70 according to my notes, which is here. So it comes up, it chops out a bit here. It's difficult to say. Would you let it ride to here? We're all different at the end of the day. Personally, for how much it's moved up, I want to see more from it. So I'm happy to take a stop at break even for the sake of getting a few extra out of this. It fails here. I mean, this is a big thing. It fails at the moving average 50 here with the VWAP above it. The fact that it's failed there, and then the second candle starts to fail, I'm taking my shares off here, taking off half here. We're going to take about $10 off it. I mean, let's be honest, it's hardly moved. But out half $10, set your stop, comes down, stops you out here at break even. You've taken $10 off it. It's nothing. You know, it's covered the cost of the trade. The main thing is it gave you the signal and you took the trade. Whether it works out, whether it doesn't work out, it's very important that you got the signal and you took the trade. If you're not going to take the trades, then the stats that you start keeping aren't really going to work out, are they? So we've taken it. Didn't particularly work out great. $10, no worries. Move on to TQQQ. I wouldn't have taken this. The candles are too big. Okay, these candles are $1, $1.50 candles. Taking it there, you're risking a full point on it. Okay, so I'm not going to take it. You could have taken it and you would have made money. So I'm not trying to hide anything on this one. If you'd taken it there, you would have made 1 to 2, maybe 3 points a share on it, and then stopped out at break even on the rest. So you would have probably made $100. But I'm not suggesting to anybody that they risk 142, 140. I'm not suggesting to anybody that they risk $1 per share on a trade. I'm suggesting you don't do that. Okay. You take 50 shares, you're risking $50 on the trade. I know it's not a lot, but I think it's a bad practice risking on trading from these scans. Risking a dollar per share isn't a great practice, so we're going to ignore this one, because I would rather you left it alone and didn't start getting involved in things with $1, $2, $3 candles. Okay. Move on to BMY. It's flat. There's no signal there. 1108. It's a flat trade. It's a horrible trade. It doesn't give us a signal anyway. It doesn't break the low of the candle there. It's going nowhere, so we move on. There's no trade on that for me. BSX does give us a signal. Okay. We get the alert here at 10 past 11, which is here on this candle. This candle breaks the low of it there. Okay, and we're risking off here. So BSX 100 shares, we're in at 27.66 here. We're going to risk off 27.77 high of day here. So we're only risking 11 cents. And we're going to cover half our shares at 27.50. Okay, so it comes down, it comes back up, it breaks that candle there, so maybe people are going to think, right, let's cover a few shares up here. Personally, again, I'm going to hold. I'm not covering here. You might cover here. I'm going to hold. It's this it's this area here, really. It's this area here. These candles here, actually, you can't see through them. These candles here, we're getting a lot of indecision in these candles here. So I'm waiting for those candles and then a reclaim of the moving average 9 here. And that's why I'm covering. You may have covered some here. Again, try not to be too emotional in the trade. At this point, you're not really up enough. It's not like you're up 60, 80 cents a share on it and your P&L's screaming at you to take some profit. You're only up about 20 cents. Just let it work itself out. Give it some room. At this point here, it does start to push back up again. So we're taking off half our shares here at 27.50, let's say, on 50 shares. That is boom, boom, boom. It's about $14 on the share on the trade. Not an awful lot again, but it's covered the cost of the trade. We're going to set the rest at break even, okay, which is there, or set at high of day. Again, look at the difference between break even and high of day. In this case, it's 10 cents. So let's set the stop to the high of day. Right, for the sake of 10 cents. If we were talking 30 cents, you might want to do that. I'm going to set my stop high of day, let it work itself out, and in this case it works well for us. High of day is here. Okay, it never gets back to high of day. Coming into the close, it starts to sell off nicely. 4 o'clock, so we're going to cover it at this 5 to 4. We're going to cover it on this candle here, somewhere around the 27.30 area. That gives us another 0.40 on the share, which is another $20 on the trade. Overall trade around about $33, $34 on the 100 share position. Again, it's been stress free. Take your first lot there. Set your stop, let it do its thing. make sure you cover into the end of the day. Get a nice little push down there. 33 bucks on the trade gives you a 4-to-1 risk reward. Okay. CNC. Let's push this back out. Where's that gone? There we go. CNC. CNC is a different one. I'm trying to be honest with this and look at it for what it is. CNC's pushing in an uptrend. It's pretty damned obvious it's in an uptrend. Now we don't get a short signal on CNC because we have this big candle. The scan goes off here on this candle. Now it's a doji. It's a small little doji, but it doesn't give us a sell signal because it doesn't break the low of this candle body. That's a very bullish candle. Okay, very, very strong candle. As candles go, it's as strong as they come. So that doji, it doesn't break that candle. It doesn't touch it really. Okay. This next candle, again, it doesn't break the low of this. And then we get a green candle here. So if we look at this and put that there, you notice that candle holds the low of this candle, so it offers some support there. It also holds the moving average 9, which is the moving average EMA 50 on the 1 minute chart. So that's strong. It's very, very bullish. So a good way of trading this would be to put your line across there, okay, and trade this as a little mini flag breakout, okay, because that's what we've got on the 5 minute chart, is a little mini flag breakout there. So we could take this long, and why not take it long? Because it's strong. It's held the 9, okay, so we could take this long as a little breakout here at 104.67. We're risking off the low of this candle here, or the 9 EMA. Okay, we're risking off the 104.40 area, which is a 27 cent per share risk. So you could go 100 shares on that, risking less than $30, which would be a nice, a nice trade to take. So we're taking it here long, and again, we're just going to do the same thing. We're going to ride this up, ride it up on the EMA 9. I'm going to take some off when it breaks below it on this candle here. We're taking the first half off at $1.21 per share for 60 bucks on 50 shares. No reason to get out on these. Taking some off here. Let the rest ride. We're going to set our stop down here. Set the stop there. Let the rest ride. They don't give us any, doesn't stop us out. It keeps going. Covering the rest into the close up here at around $107 as it comes into the 107 mark here. Take the rest off, and that's $2.33 per share. That gives us another $116 on the final 50 shares. That's been a nice trade. In total, add the two together, we're getting $176.50 on this trade. Okay, we risked 30. We've taken 176 off it. That gives us a 6-to-1 risk reward off the trade. So the reason I like this trade is because it shows the versatility of a scan. Okay, the fact that we've had all those green candles and we've got these tiny little red ones shows us that we can reverse it. We can reverse the scan. It broke back out again. It failed. The reversal failed. It's strong. So let's take it long. Okay, if something's strong and it fails to reverse, let's take it long. If something's weak and it fails to reverse, let's take it short. There's no reason not to do that. So the scan is just alerting you to something that's doing something. It doesn't have to be used. Because it's green, you don't have to go short. Because it's red, you don't have to go long. You could just use that as a place to get in to join trend, and that's all we've done here. We've joined trend on this little mini flag break here, and we've taken taken just under $200 off the trade. So I think that's a good trade for us. MRO. So this is a red trade, or break even red trade. So MRO gives us 11.15, which is here. So on this candle here, it gives us the signal to look at the trade. Let's say we take it. All right. So we're going to take the trade short, 15.88 area. Give it a go. Here. Give it a go there. Okay, and we're going to risk. We're going to risk off there. All right, so we're in 15.88. We're risking off. Let's say we're going to risk off the 16 whole number, which is there. It's a bit above the candle, but Jesus, we're still only risking 12 cents. So why not give it to there? Just makes sense, really. The difference between 3-4 cents in that void there, we may as well risk off the whole number. It gives us no reason to take any shares off, that's for sure. So at this point, we're just letting it do its thing. We're letting it do its thing there, and it stops us out there for entry was. We're going to lose 12-13 cents on it, okay, on 100 shares. So we're going to lose $5, $6, $7 on the trade. No biggie. It's a red trade. It hasn't cost us anything. We've stuck to the plan. We've stuck to our rules. Taken us out there. This is the importance of setting your stops and to stick to it, because it did go on. You would have ended up with a 40-cent loss. So stick to it. It was a red trade. Don't get emotionally involved at this point thinking, oh, shall I, shan't I? Shall I just give it more? You set your stop. You stick to it. Okay, that's your plan. You plan your trade. You trade your plan. You're stopped out. Move on. Okay, we lose $10. It's no biggie. Next trade is LFIN. I wouldn't have taken. I personally wouldn't have taken this, but let's, for the sake of the stats, let's say we did. I mean, this thing was just dying through the day. There's no way I was going to look. Personally, I would have gone long on this at this point. But let's imagine we gave it a go. All right. So the buy signal, a signal to go long, is kind of here, really. We did have a whole number, so we had the 20 there, around there. It didn't, it couldn't break back through the 20, so it gave us an idea that it might want to push up. So we're taking the trade there at 20. What price is that at now? 20.78 there, and we're risking off. To be honest with you, at this point, it's an up or out for me. Just a second, sorry. Yeah, sorry, I got that. I got confused with the 20 and the $21 there. So it actually hits the scan here, 11.47, which is this candle here. But we don't get a signal to go long. We don't get a signal to go long, and then all of a sudden it holds over the $21 mark here. So maybe you think, right, let's give it a go. It's held 21. Let's give it a go. But it's got to be an up or out at this point. Okay, I'm not. If it breaks back through the 21, I'm not going to hold it down to 20 on this candle. It's a horrible candle. Maybe give it a go. The spreads were nasty. There's no way I would have taken it, but for the sake of doing this, the stats and everything, let's say we gave it a go. Well, we took it at 21. It popped up, and then it obviously started to die. It couldn't break the 9 here, which is the 50 on the 1 minute. It starts to die back again. So we take a cover as it breaks lows. Let's say we lose 20 cents with the slippage on it on 100 shares. We're going to take a $20 to $30 loss on this. Okay, you might have gone short and given it a go short, but we're not even going to go there with this. That's not what on it. So we've taken a $20 loss on LFIN. It's a horrible thing, you know. It was a horrible trade ticket to try and trade really on the day, unless you got a really good entry earlier in the day. The spreads were a bit nasty. So apart from that, there's nothing else on the scan really. MSFT hit later in the day. 1349. Again, we didn't get a signal to go short at this point. And it hit again later on. At this point in the day, at 2 o'clock in the afternoon, 3 o'clock in the afternoon, I'm not looking to take plays off these scans, to be honest. Sort of time of the day when we're looking at double tops, whole number rejections, that type of thing. The scan's really in play from 10 a.m. till 12 a.m. for me. Once you get over that around the lunchtime, the volume starts to die. They're just not really as good as as they could be. So that's it really. So looking at what we've done in the day, we've taken 7 trades. 5 of them are green, 2 of them are red. Total in the green trades was $362, trading mainly 100 shares. The 2 red trades gave us around $30 to $40 loss, so it gives us about a $330 gain. $50 in fees, so we should have had around about $270, $280 on the trades. The average risk reward over all the trades was 5 to 1. I think that's pretty encouraging. At no point have we risked a big loss on any of the trades. We've not there are no heart attack trades in there. Let's just take a quick look at some charts. Okay, I posted these the other day, but just so we can look at our entries and stuff. So let's just get this straight. So we're entering on the break of the previous candle, we're risking off the low, and we're taking covers along the way. I posted these the other day in the members posts. So it's important to learn your candles. With loads of stuff in the members area, posts area on candlestick recognition and candlestick patterns. Understand what these candles are. Learn to see what a seller's candle is. Learn what a doji candle is. Okay. Really important if you're going to use this scan that you know some basic candles. Okay, you got your long-legged doji there, and then a nice big candle that starts to go up. So we're taking, you're getting in there. Sometimes you get a little topping out pattern here. Hits a scan there. You're waiting to go short. There's no short signal there, but if you keep watching it, these candles start to tell you here that a reversal's coming. A nice doji there. Okay, doji, 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 and then we're taking a short there. Anyway, all these charts were posted last week. Go through them, take a look at them. Just ways of reverse engineering the scan again here. So it picks up there. It never gives you the signal to go long, but it does give you a short signal there as it breaks back through. Lots of ways to play it. Okay. Let's just get rid of these. Back to where we were. So anyway, that's just a recap really of Thursday's trades off the scan. I think what I'll do is, as I said, every day I'll post the scan results every day so that you can go through them and start keeping your own stats, working out your own little way of trading this. You don't have to trade it that way. You could, if there's something that you feel more comfortable with, then go down that way. For me, I'm entering on the break of the body of the previous candle and then risking off highs, lows of the wicks. Give it a go. Trade it in a demo account if you're not comfortable trading it in your live account. If you're going to start trading it with real money, then start with real small size. Try 25 shares, try 50 shares, whatever feels most comfortable to you. Give it a go for a week, see how you get on. But the point of this is I just really want people to understand that with scans like this on screen share, there's really no reason to not be making a little bit of money. Okay, really, there is no reason to not be making some money. If you're not getting in trades, if you're finding trades difficult to get in, or if you're not comfortable trading right around the open because it's too fast for you, then focus on something. Focus on this scan. Focus on the VWAP scan. But just do your homework, okay? There's nothing stopping you asking me or Pat to copy and paste these results for you, okay? I am more than happy to copy and paste results from scans for you if you want to start doing some stats on it, okay? You only need to ask. That's what we're here for. Okay, so anyway, it's gone on a bit longer than I wanted, but hopefully you'll take something from this. I certainly do, and start looking at how you can use these scans to make $100, $200, $300 a day, every day, okay? Because that's what we want. That's what these scans are for. They're here to make us money. Now, if we can make $280 from this one scan on a day like Thursday, when the markets were absolutely disgusting. I mean, they were horrible on Thursday. They were horrible on Wednesday, and I've backtested Wednesday's scan, and that was cracking. It's been good all week. It's just got to know how to use it. When it's sideways, leave the trade alone, okay? So when we get, which was it, BMY, okay? When we get something like that, there's no signal, just leave it be, okay? Leave it alone. When we get something like TQQQ, where we've got $2-3 candles, then don't take the risk. You don't have to. Plenty of opportunities to take low risk trades where we're risking no more than 15-20 cents on the share. When you see something like that, then take the trade, okay? Take it, set your stop, let it do its thing. Okay, I will do something on the VWAP scan, hopefully over the weekend. Busy today, working the rest of the day, so I'm going to upload this now, and hopefully somebody will watch it and take something from it. Okay guys, enjoy the rest of your weekend, and I will catch up with you soon. Thanks.